If we are going to 200 and 198 with the sterling yen, we were even looking at 201 and 202. With the dollar yen here on this 4-hour chart, we are actually going to 160, maybe even higher. The fundamentals are very mixed. The latest fundamentals that we had was anemic growth or depreciation in the gross domestic product, growth in Japan. Of course, this could become worse as we move forward, given the trade restrictions that are now going to be imposed by the US administration on most of Asia's corporations and countries. And therefore, we're going to be seeing that the Bank of Japan, their interest is to see a weaker yen in order to encourage or at least attain the same level of exports that does sustain Japan's economic activity. And therefore, they want probably to see a weaker yen against the dollar. There's no problem if it goes all the way to 160. We're buying the bounce out of level 1. We talked about this several times. This is level 1 here, and this is the bounce that we're buying. If we are not short-term trading it, we just buy and we hold for moves to the upside. We're going into the Federal Reserve meeting next week, and I believe it is. It's probably going to be a hawkish dollar event, because even going into the meeting without the meeting itself, because most of the belief is on harsh rhetoric or harsh talk out of the chairman, Mr. Powell, that they are going to be doing whatever it takes to keep inflation at 2%, bring it down at 2%, even if this means that they're going to be raising rates. Again, it's a tool that they will have to use. All right, so we were looking at this segregation. We believe we finished the 5, quite close to top 1. Market here goes to at least 157.50, 158. Today we are at 148, about 149 now. We have a bounce out of level 5. Let's investigate this together. This was yesterday. We had a bounce at around below 148. This is what we're seeing today. This was, of course, yesterday. That's when we took the trigger yesterday. We perceived that the market has bottomed and that we're getting a 1 and a 2. Where we didn't label, but it's a 1 and a 2. We're getting a 3. 3 must take out level 3, of course, and it's probably going to attack level 1. We did discuss the targets yesterday, were 152 and possibly over here we're seeing 150, 135. So we will take out level 1. We are going, so level 3, we'll take out level 3 and we're going to level 1 in the current move. Now we focus on level 3 itself. So this is level 3, 148.50. The market here is 148. I believe we're higher. We're seeing an ending diagonal move. Any retractions or buys, the pattern itself is a buy. We're just seeing an inverted head and shoulders. We buy, take it to the end of the week, take it to resistances on the hourly time frame, end of the week. And of course, resistance on the hourly time frame may be attained by the end of the week, or the market may even expand higher. We close out by the end of the week and redo the position next week. So let's take this 15-minute live. This is today's. You just see an ending diagonal. When we get retractions, 147.50 is a buy, moving average is a buy. If we see any negative momentum on the 5 and 3 minutes, I don't think we are going to be seeing any. We buy the negative momentum that we're seeing on the 5 and 3 minutes, take it to the next internal resistance on the 1 hour. Let's take it live then. So like I'm saying, there's not going to be any negative momentum anywhere. Let's look for high triggers first to make sure that this is expanding and that we are supported in taking longs at higher levels. We have, of course, a very strong trigger on the 45, on the 30, on the 1. I believe that's enough. Not yet on the 2, but we have a cyclic stream, and definitely not on the 4. I can first segregate the rise, take it back to 15. We have an internal 1 and a 2, and we're doing the 3, and we just need to buy into this. All right, so I was saying we have a 1 and a 2 because of the negative momentum showing here. All this is positive traction, a 3. It shows, of course, something like a 1 and a 2 at this point, a 3, 4, and a 5. So level 3 is very clearly identified. Level 1 is very clearly identified. We need to wait for that retraction unless we're already long. Market is 149. That retraction takes us back to 50%, level 3, this level. 150, 148, I believe 148. 50 can be seen. We're seeing 148.42. So 148.42 with a little spread takes us to 148.50 actually, 148.46 possibly. And therefore we will do the long at 148.50. Very sorry. So the market is long at 148.50. We edge 147.60. About 90 points lower. And we're going to target end of the week. Take it to hourlies now. Take it to 1 hour. We talked about the targets yesterday. We're looking at 152. Midway between resistance 1 and resistance 2 is 151.90, which is really 152. We may get 153 is also possible. 153.12 is showing here at resistance 2 itself. We have a higher neckline at 154. But I believe we don't go there easily. We just go to level 3, 151.25, and slightly above is 152. So we target 152 and 152.50. 152, if we do the entry at 148.50, all the way to 152 is actually 350 points. 152.50 is 400 points. In all cases, we will close by the end of the week.